This panel will be discussing the global economy and the impact on the major currencies in the world. I don't know, guests, speakers, tell me, do you think that the Fed decision might be the most significant factor influencing the major currencies nowadays? Makarim.
Makarim,
so
exactly. I'm having a problem always with the Egyptians calling me Makram.
Ladies and gentlemen, Wa'il Makarim.
Thank you. So yes, of course, the numbers. First of all, thank you everyone for showing up. I hope you enjoy our discussion. So of course, it has a significant effect, whether it's the Fed decision or the numbers that are coming out that are influencing the Fed's decision. We've seen this the past week. We've seen inflation figures, how they impacted how the market is expecting the Fed to perform. So this also impacted different asset classes. We've seen indices flying to record high. We've seen the dollar weakening. We've seen gold also trading close to record high. So of course, this is all the market move itself. It shows that yes, this is of a big significance, especially that we started the year in a place where the market was overstretched on the opposite side. So we started the year with the market expecting 67 interest rate cuts. Now we're almost expecting 1 to 2 end of this year. It all depends on the incoming data, but yes, this makes it more significant to traders to keep an eye on what the Fed would be doing.
Muhammad, let me move to you.
It is indeed, as well said, it's one of the major things that are moving the market, impacting, since everything is priced by USD. So of course, any movement from the Fed or a decision, or even sometimes we are witnessing comments from like Fed chairs on different status, and it's impacting the market in a direct way. So indeed, yes, it's one of the major things that are moving the market this year. We're still waiting. Also, this is an election year. Don't forget.
Yes.
This will be an extra, I think, impact on the market on the upcoming month.
Okay, Slobodan, the Fed decision is definitely influenced by the condition of the American economy, which is, of course, part of the global economy. Do you think that the Fed is doing what is needed and he's looking at the right factors when deciding on what he should do with the monetary policy?
Depends from the perspective you watch these things. They do something. If you go back when inflation was very low and then started raising, what was the Fed reaction? They said, don't worry, this is transitory, this is temporary phenomenon, it's going to eventually fade. Until they realized that inflation got unleashed and is surging. And then what did they do? They made a panic reaction, sharp increase in the borrowing cost. These are the tectonic movements, and the economy cannot stand it easily. Even though American economy is the number one, the biggest in the world, it's very difficult to stand this without serious consequences. So in a way, yes, they did a right thing, although many economists will say there were other things that could have been done to put inflation under control. But yes, increasing borrowing cost is, by textbook, it's the key thing. Now, how did they manage to do it? They did. Although many say it's very easy to drop inflation from 9% to, let's say, 3.5%, 4%, then to bring it down from 3% to 2% target. So now we are facing this period when they are facing a lot of difficulties. Inflation is stubbornly staying 3 point something, going a bit up, going a bit down, but not moving in the right direction. So they have a lot of work to do.
Okay.
Conditions of the US economy, unmeasurable debt, geopolitical things, we don't know. US economy is resilient, is in quite good shape, thanks to the military industry mainly. But there is still a lot of work in front of them, and it will be very interesting watching how the Fed will behave in the near future.
Perfect. Hani, there is a debate around what the Fed should do and what the Fed will do. That the main focus of the Fed is the American economy, while we know that what the Fed will do will impact the whole entire world. Do you agree that the Fed did the right thing, and what factors or what things the Fed should focus on and look probably put into consideration in terms of taking the next step?
Thank you, Lubna. I think the Fed
we can say that it's too late to hike, too early to cut.
Come again?
Too early to hike, too late to cut. I think
So
the
they
invest-
did not get it wrong, in your opinion.
They are currently like in watch and see. They are waiting for the data only. They cannot do that big maneuver around the interest rate because the time to hike, I think, is already behind us, and it's too early to cut. Even when they said like around 3 cuts this year, I think it's really far. Like they might only make 1 cut during this year. I think what they should focus with the CPI services is very high still, 5.3 around that one. If we move the shelter out of that, it's still 4.8. It's really high. I think they should focus with that, and the PPI also is going up. That means even the prices for the products still will be high, and don't forget even the oil we didn't break below than 81. So we can see that the oil going down, that still going up and might move up more than 90. So I think the CPI will be back again up. It's very hard for the Fed to cut during this year.
Okay, Amjad, you're the only American on this panel. What do you think?
So I just want to say something. If let's just take a step back and look at the state of the interest rate within the last 20 years. Everybody is hyper focused on the Fed cutting now, and they're saying that the rates are high. But if you look at early 2000 or even the rates were artificially lowered when after the financial crisis. So we were dealing with 0% interest rate. This is not the norm. When I came to the States in the mid 90s, interest rates were 7 and 8%, and the economy was flourishing. There was this hyper focus on bringing it back to zero. I think zero is not good for anybody. Zero is artificial. It caused the stock markets to go high for no real reason. And
I have a question here. Do you think
Sure.
that the Fed should change the mandate, or the inflation
Absolutely.
target from
Absolutely.
2% to something else?
The target of 2%, I think, past Corona era is unrealistic. I think realistically 3 or even 3.5 is more normal. In reality, things have gone up pre-COVID to now, almost 100% in the U.S. I go to the store and buy stuff. From 2019 to now, it's 100%. Home prices, cars, everything. So we are in a new norm, not just in the U.S. I think everywhere. The deflation. The devaluation of a lot of the counter currencies. You go to the Middle East, maybe the UAE and the Gulf are pegged to the dollar, so they were not affected badly. But you go to other countries, you go to Turkey, you go to Egypt, you see the countries depreciating almost 300-400%. So I think we need to, and the market actually realized that because we are almost at all-time high, and the Fed haven't even cut, or they haven't indicated when they're going to cut. Yes, they're talking about 2 to 3 cuts this year, but so far there's nothing. Why? Because the economy is still resilient, and the global economy is resilient. So I think, we've got to step back away from going back to zero. I don't think we should go back to zero. I think zero is not good for the economy. Cheap money just causes hyperinflation again. And this is, and even cutting rates or even raising rate by the Fed to combat COVID, this is the main tool that the Fed have to raise interest rate when the economy is heating up. But what happened is that we printed so much money. So the inflation that we had wasn't related to overexpansion in economic activity, was basically related to the pandemic and the printing of trillions of dollars without any backing in goods. So I think the Fed is realizing this, the market is realizing this. Politically, they can't do anything in an election year, so they're not going to change the mandate. So I think we have a bit of adjusting mentality, because a lot of people here are used to the last 10 years with zero interest rate. But if you go back and you go back to people maybe our age, you realize that the economy flourished at 7 and 8% with no issues. So if you go back to 3.5, still we still can experience economic growth and a real economic growth, not inflated because of zero interest rate.
Okay. Well, he mentioned a few very interesting and
actually,
debatable points. So first of all, he said the global economy is resilient. The American economy is resilient. I don't think it is the case. Maybe I'm wrong. 2, he was talking about fiscal policy, like being on one hand, they are doing tightening, while the monetary policy is tight, while the fiscal policy, they're expanding and they're issuing more T-bills, treasuries, and they're printing more money. What do you think of that?
Well, I have a couple of points to just comment on. Two things. First, inflation and what you mentioned about interest rates. Yes, pre-financial crisis interest rates were around these levels, which was normal. And yes, what happened for 14 years since 2008 till 2022 of almost zero interest rates is bad, and I don't think we're going to go back there, and it's not healthy to even go back there. However, if we look at the signs from the US economy, the latest ISM services and manufacturing PMI, they started, for the manufacturing, we've been below 50 for a long time. For services, we dipped below 50 for the first time since 2022. We started seeing a bit of signs of slowdown, little, and this was an early sign during previous recessions. Another one, we're seeing a little bit also signs of cooling down in labor market, whether on unemployment, whether on jobs creation, whatever. It's not very bad, but still, like, it's the lowest since 2021. When it comes to inflation, I didn't see inflation going down much. We have a problem with the metrics of calculating inflation. Yes, we're down, for example, on a year-on-year to 3.3, but that comes on top of 11%, on top of 8% on the previous year. So this puts inside numbers which is really, really high for the past 2 years. And the Fed and the Fed really acknowledges this because it comes to how healthy the consumer is. And at the time, they can't really go against the tide and cut interest rates fast with oil prices around 80, whatever. However, the question is on the fiscal side. On the fiscal side, they're spending and spending and spending, and they're issuing a lot of debt. And when we come to a place where in Q3, the US government will have to issue around 850 billion in debt. So the question comes in, who would buy that debt at a time where there is a big competition on the debt markets globally, and at a time where the Fed really started to acknowledge that threat, and they started to ease the pace of quantitative tightening, or they will start since the 1st of June, from 60 billion to 25 billion. If the Fed was seeing that everything is in shape and we're fine on terms of fiscal and monetary, they wouldn't just like lower that pace. So they wouldn't come and reinvest 35 billion a month. But the pressure that's coming from the fiscal side, that's not stopping, and there's no sign for that stopping. Plus that the debt paid, the interest paid on debt crossed, for the 12-month rolling, crossed 1 trillion. So this is really making an issue for the Fed that would be forced to at least lower these borrowing costs, because at the time, if the Fed will keep interest rates at these levels, around 5% levels for a longer period of time, and the US, on the fiscal side, the US keeps on issuing debt, and they're spending everywhere. And with all these geopolitical tensions, they are forced to spend more. So this will only take their debt exponentially, and will reach a time where who would buy that debt? So this is the trigger where the Fed could really shift on narrative. Yes, I'm against interest rates going significantly lower, but at a time there would be something where the Fed would be forced to do something about that.
Thank you. Muhammad, away from the Fed and what the Fed is doing and what the Fed will do and how that will impact the whole world, including us here in this region, there is probably a couple of factors that we need to discuss here. In your mind, what are the top 3 factors or challenges facing the economy nowadays that we should focus on, and they have a major impact on how we trade currencies today?
Actually, one of them, of course, as we said, it's the Fed and the monetary policy. The inflation numbers, of course, that leads to the Fed decision on the upcoming period. And the geopolitical things that are going now on the ground, it's also affecting the behavior of the investors. Like we are witnessing historical numbers on gold and silvers and commodities in general as a safe havens. People are these elements are moving on based on the people behavior on what's going on the ground.
Do you see people moving more from risky assets to safe
conservatives?
havens?
See, at the same time, it is connected to the upcoming step on the monetary policy, because if there will be more easy and there will be more liquidity on the market, people are also willing to take more risk on the risky elements such as cryptos, such as other and the stocks market, of course, when there is more liquidity on the market. So it is at the end related to the next step, and from my point of view, I believe that the next cut rate will be at this year. We will witness, because based on the numbers that is coming from the economic from the United States economy, we are witnessing some big names banks are facing problem from the high interest rate that affecting the market. So those are the main challenges I believe that are facing the
So
market.
monetary policy and geopolitical risks.
Yes.
Slobodan, let me bring you in here. How can we hedge against geopolitical tensions? How can we find the right strategy to mitigate risks associated to political instability today?
I think we live long enough in the very turbulent times. If we go back from 2020 Corona and things that were following, there is continuously something. Okay, they are getting higher and higher, more intensifying, more pressure in the market. But until now, I think we should have learned already how to react on certain things. I like to say, regardless to the major rules, when you think or someone says Fed will cut rates, definitely this is going to be pressure on dollar. Think out of the box a bit, because it may not react totally in that way. There is a good sample during the coronavirus. Gold surged higher. It went above 2,000. And then all of a sudden changed direction. People went into risk mode, out of any rules, completely against. So this could happen now because there are so many factors currently influencing the market. I agree. Geopolitics, inflation is a key driver of everything, and all that comes out of these things. I will slightly disagree about Fed that they may cut or will cut this year. Because if we just go back to the near history, they were guaranteed in March, the first cut, for sure. Then what happened? Nothing. Then May, then June, September. Now they are operating maybe December, maybe the first 3 months of 2025. Obviously, they don't know.
So you don't see them cutting this year?
I think quite unlikely, according to my view, because there are so many other factors. The U.S. Policymakers are between two opposite, very strong forces, and they have to balance between these two things. There is, if you see the larger picture, there is a huge economic conflict between United States from one side and big economies led by Russia and China from the other side. They are trying to bite each other. The latest decision to impose huge tariffs on the Chinese imports from China in the United States is one of the signals that something is developing.
How do you think that will shape up, really?
Look, if Trump wins, let's say, in the election, his policy was, during his previous mandate, to impose tariffs on anything from China to punish China. Now, from the other side, Democrats, whether they like it or not, they will be forced to do that, and they did it now. So this is going to be another factor that will impact decisions, monetary policy, political decisions, impact the markets. We have quite enough strong drivers of the market to expect in the near future, not to go further down. But if we had 4 years in intensive market action, I think it's not going to stop just all of a sudden.
I think this is an important point to discuss. Trump or Biden, where do you think who's going to make it to the White House?
Well, I prefer Trump. It's not because
You
because
prefer
like
who?
usually markets
Okay,
like were
Trump.
more active during Trump's era. So since 2016, 2020, there were more developments, especially that it was more intense between China and the US at that time.
Okay.
It's not that good maybe to the global economy because it was breast, but also during Biden administration we had different conflicts in different regions. So,
Okay.
but when it comes to markets, I believe markets are more optimistic
They
about
like
Trump
Trump
coming
more?
into.
Trump,
but
yeah.
I don't.
Of course.
I don't
Republicans
think,
are-
I don't think it's going to be the same as the previous era. Trump this time is not going to be the same as before. So I believe the market is going to have more risk than previously. So it's not going to be a smooth, easy ride like the one we've seen in 2016.
All right, Muhammad, Trump
Yes,
or Biden?
يعني market movement and volume wise, of course, I will agree. We are
Trump.
all looking for Trump to come back
Okay.
to the White House.
And personally,
No political, no political.
no political opinions
No
here.
political opinion.
Slobodan, do you think Trump or Biden?
To be honest, I have slight
You're confused.
things moved towards Trump because Biden is doing some things that, according to information I have, are not very popular among American people.
Okay.
Nope.
Although the way they can manipulate people with the political propaganda during the campaign, it's amazing. So I would say 60 to 40 for Trump, although regardless who is going to be the president, the U.S. Policy has been already written. So whoever will be executive there will be.
I see an excited
managing,
American.
task.
We need
So-
to know the American. Who
So,
are you going to vote for?
well, I voted for.
And you have to be careful what you say.
That's
huh?
fine. That's okay.
Yeah.
You know, I voted for Trump before, and
Okay.
I intend to vote for him again.
All right
Not
then.
just because of, you know. I think Republican in general are more pro-market.
Okay.
They are better when it comes to taxes, you know, for hardworking people like middle class like myself. So for me, I don't get a handout from the government. So a lot of Democrats vote, unfortunately, that's how it is, because of they get handouts, you know, and for other reasons, but mostly for financial reasons. I'll give you, you know, maybe I don't want to get into politics, but I'll give you an
please-
example.
please
So,
do.
and I'll give you an example, and let's be, you know, I'll be as frank as possible. So, Trump was 100% to a great extent pro-Israel during his term. Okay, and the biggest Jewish concentration in the U.S. are in New York. Trump and Republican lost New York by 65 to 35. Why? Because they don't care about politics. They don't care what he did for Israel. They care about economy, and they care about the handout they get from the Democrats on the state level. So people vote based on their pockets, not their political view, mostly Democrats. On who's going to win, I said the same thing. The Democrats changed the rules of the game in the US. Beforehand, we all voted in person. Now we have this quote-unquote unsolicited mail-in ballots. Millions of ballots are sent to especially big cities. You don't know who's signing them. You don't know who's collecting them. You don't know who's harvesting these ballots. So we go to sleep, you know, around midnight in election night, seeing that the Republican candidate, and generally speaking, whether it was governor, state level, or presidential, and he's winning. And you wake up the next morning, and somehow several hundred thousands or even millions of bags full of unsolicited mail-in ballots came in, and they are 90% Democrats, 10% Republican. I've seen it in the New York election, the governor election. We've seen it in the New Jersey election, and it's very disheartening because we stand in line, they verify our identity, but these guys come in with who knows who signed these ballots. But and that's the problem, and this is why I think there is unfortunately a chance of Biden re-winning, because you look at states like Pennsylvania, you see a sea of red, but you have two big dots of blue, which are the big cities where there's a huge concentration of poverty, and they are the one who determine the outcome of the election, and they will vote Democrat regardless of who's running, even if Biden is cognitively unable, who is not there, yet they vote for him just because he is a Democrat. They vote on party lines rather than of who's running there. Republicans a little bit different. You know, 2 elections ago, Mitt Romney was a Republican running for election, but Mitt Romney was a Mormon, so he wasn't really accepted by a lot of the majority evangelicals who are supporting the Republican Party, so he lost. But Democrats will vote for whoever is there, because as long as you keep signing the checks, they will do it. I just want to comment real fact
Get
about
the Democrat on board.
on the EV in the US. We don't have a single Chinese EV in the US. So whatever Biden signed is more symbolic than anything. You know, it's not really going to affect, because no one is importing any Chinese EV in the US and nobody's buying them. So whatever he did in terms of tariffs, he can change it. He can charge it 500%. There's no cars there. So what are you charging? It's more symbolic than anything.
Oh,
You
wow.
just want to show.
That's interesting. I didn't know.
No Chinese cars in the US. Not a single car. I have not seen one at least. So it's more symbolic than anything, because there's no cars to tax. So you can tax them at 500%. In terms of solar panel, they are mostly done in Mexico or in southern state. So Biden is trying to show that he's as tough on China as Trump, but everybody knows this is just all for show, because there's no real Chinese product of this here. And also he's trying to make sure that the Detroit, Michigan, where the concentration of car makers who are traditionally voting Democrats are also with him, because with what happened with Israel and the attack on Gaza, there are a lot of Arabs. Michigan has the biggest Arab concentration. A lot of them were against this, and they've promised to vote against him. So he's trying to win. So there's a lot of politicalization of
it's
this
a
decision.
difficult one to
Absolutely,
navigate.
absolutely.
I think it's
hope
going to
he
be a
doesn't
major
win.
event this year.
I don't think he's cognitively well enough to run again. Unfortunately,
Biden.
100%.
Okay.
He's definitely not cognitively well
خلص,
enough.
no one
It's
voted for
very upsetting.
Biden here, but poor him. I feel
Nobody-
sorry. Hani, say something else.
I'm telling you,
Please.
these ballots that come in at night, these are the ones that change the outcome of the election, and unfortunately, it's like almost to, back to like my home country in Egypt in the 1990s and early 2000, where you get these big ballots coming in and changing the outcome of the election. So it's very upsetting for us to see this happening because we're not used to this. But it's up to the state level to change election laws to enforce people again to either come and vote in person or request what's called absentee ballots, where you can actually request this so we can verify your identity.
This is,
Yeah.
I'm not going to comment on that. I have to be neutral here. I'm Syrian Italian, and the Italians are known for being troublemakers, and Syrians too. So I'm going to move to Hani. Hani, back to what Slobodan said. He thinks that the Fed will probably not cut this year. What does that mean for the gold and the dollar?
Okay, before that.
Yeah, Biden or Trump, yeah.
70-30 to Trump.
Okay.
I think it's not about Biden that is not fit physically, but I don't think he's fit for the current situation in the
Biden.
world. Trump, we need a businessman who understands this world, what's happening, all the happens with the market, the wars that happening between Russia and Ukraine, the war in the Middle East, the trade war that happening between China and US, how important is Taiwan. I think that needs a businessman. Second thing, yes, they might use a trade war as like collecting voters. And they might sometimes signal to the crypto-friendly companies that we might ease the things for you, and also other things about the electrical cars, that we might impose tariffs on the Chinese one, and the batteries, and also the solar panels, all of that, like they might use that one. But at the end, will slow down the growth, I think. Trying to slow down China, that the second biggest economy in the world, and by this trade war, and trying to impose and use it also in the election, that's, I think, really going to slow down the whole world economy. Second thing about the Fed rate and how it's going to really affect the dollar. If we see the dollar index itself moving from 100 all the way to 106, and it signal technically that it might reach up to 107 or 110, I think the dollar will be very strong. That will really affect the biggest markets here. We have seen Egypt, how is it affected badly with a strong dollar. Turkey, the same thing. The other countries that they're trying to stop their currency from falling down, as example, Japan, when the US dollar, Japanese yen reached 160, I think the strongest the dollar, it really affect the other countries and the emerging market especially. So I think we need Trump.
Yeah. You need Trump.
I hope that won't be the wish that it's not going to happen.
Yeah. Be careful what you wish for, right?
Yeah, exactly.
That's an important saying. He mentioned the Japanese yen. In such a difficult landscape, whether when it comes to geopolitics or we don't know where the global economy is going, what's happening in Europe, what's happening in Japan. There's so many questions on the slowdown in China and so on. What is a safe haven today? Are we still talking about the traditional safe havens like US dollar, Japanese yen, Swiss franc, and so on? Or this is different now? It has changed.
Okay, there are two main things to talk about. Among them, the safe haven. I hate the word safe haven traditionally, the one that you mentioned, like Japanese yen, Swiss franc, some people go to gold, whatever. So as a safe haven, it's just like what's the best performing asset with the least drawdown. So if we look at the S&P performance for the past, I know it's risky, like we go for stocks as risky, but if you look at the performance of S&P, the drawdowns that happened were almost negligible since the beginning of the year. So that's a good performing, that's a good return that you got on the least drawdown. If you look at volatility on all that, so if you overload stocks, you have made so much money. Even that we're in a turbulent mode, we have all these tensions, etc. But what we've seen, the landscape, the investing landscape is changing completely. We're seeing interest rates higher. We're seeing interest on on tips, it's significantly higher, yet we're seeing gold at record. So there are a lot of things that are changing, and since markets are always evolving, we need to stay on top of things on how to do. For example, in China, there was a premium on gold for a long time. And this goes to the downfall that we've seen in the stock market and the real estate. So people, they wanted something to go for, so they went to gold. Now we're seeing also in Korea, they're just like buying gold off the streets. So there's a lot of drivers that are changing how we look at assets. So yes, for example, gold is top performer and it's performing really well. It could be an option. For me, just if you look at long-term investments, still stocks, they're still very solid. We can't consider
What
a safe haven,
stocks?
but what we do, we go on diversification. Another thing when it comes to the dollar and the comments that the guys mentioned about the dollar being affected by what the Fed would do, we're in a very complicated scenario where it's not that all central banks could do the same. So when we see, okay, the dollar is going to go down, dollar against what? Is it going to be the dollar against the euro? Is it going to be about the pound? Is it going to be against the Aussie? So these are changing because each economy is different than the other. We started the year with a solid differential and the market expecting the Fed to cut before ECB and Bank of England. Now it's the other way around. We're seeing differentials coming again in favor of the dollar. So this doesn't mean if the Fed wants to cut interest rates, it's going to mean that the dollar is going to weaken because other central banks could be in a weaker spot. We're seeing the US economy more solid than other economies, especially if we're speaking about Europe. About China, we're seeing a lot of good signs. The People Bank of China, they're doing a lot to try to revive the economy. They're doing a lot to try to revive the real estate market. So this is putting a lot of focus again on China. We're seeing stocks rallying from the bottom. And if we look at investment levels, if we compare US stocks to Chinese stocks, if we see the discounts that happen on Chinese stocks, they're very interesting for investors. So there are plenty of spots where someone could be looking for good justified returns, I believe.
Will you still keep your savings in dollar?
Well, this is a very a cliche question that everyone wants to know about. It's a very nice question, especially
No,
with
what we wanted to know
that-
about how much money you have in the bank.
that's a
What's
big thing.
currency is a different thing.
So that's
As long
when-
as they're selling oil in dollar, yes, I'll keep it.
The thing is now you're just like, if the question is going to be whether you have fiat or you have crypto or whether you have stocks or whatever. So recently we shot a video like in February, and my answer was all about diversification. Of course you need cash. If we come to whatever thing that we talk about, everyone will say, crypto, we're dealing with crypto, USDT, Bitcoin, whatever. But in the end, when you want to cash it, you're just going to dollar because the utility is still very low compared to that. When it comes to, if I look at my risk profile at my age, of course, it's very stupid to be in cash for long. So you need to be investing as long as you can sustain that risk. When I maybe be in 50s, I would be looking to hold cash and bonds maybe at the time, yes. But for now, I'm full on risk appetite.
Yeah, in the 20s, definitely you take risks.
Exactly.
Yeah. Muhammad, he mentioned crypto, and I would like to understand from you, with the rise of digital currencies, crypto, blockchain technology, how do you see that impacting the long-term FX trading?
If we want to talk about the technology itself, the technology, it is in use, and it will be in use, I
For a
think,
very long time.
for a very long time. In terms of how to choose in which currency to trade in or to invest in, it depends as your behavior as an investor. Are you a conservative investor? You don't want to take risk. You go for the big names, but part of your wallet it has to have a digital currency at the end. It is real. We are dealing with it. As Wael said, at the end you have to cash it. You will cash it in dollar. Until now, so it is in need.
Crypto. What do you think of crypto? Do you think it's an asset?
Whether we like it or not, it became. I had a view of crypto as a scam at the beginning.
Okay.
At the very beginning, I was offered, I'm now embarrassed to say, but I have to say, I was offered to get 100 pieces for $1,000.
Wow. And you said no to that?
I said, it's scam. It's not a matter of $1,000. It's something, I'm going to feel bad. I'm going to lose this $1,000. I better give it to charity.
I
Now
like
I would
Amjad's
have
reaction.
7 million.
Yeah.
I like Amjad's reaction.
That's
I admit,
it's like
I admit
$600,000
I made a
now.
huge mistake.
Yeah.
But if we just take a look at performance of Bitcoin during the first 4 months of 2024, it was up 90%.
Yeah, but the volatility as well
So-
is a risk, right?
90%. Gold was up 18% as a safe haven. So crypto became safe haven, in a way, safe haven also. Very popular, very much strong demand, although it's much more dangerous. It makes wild swings. If we just take a look at the monthly chart, we'll see 60,000, 15,000, 50,000, 38,000, 74,000. It's a huge risk. But if you take it as an investment for a longer term, I see it as a quite good for the time being.
Wow.
Although I still have in one part of my brain still
You're
a
still
bit
refusing
suspicious that it may collapse one day. As it appeared, it may disappear. I hope not, because there is a huge demand. And what supports the story is the strong institutional buying. Central banks are buying. There was a big name a couple of months ago, purchased $151 million worth.
And I think the biggest
Bitcoin
holding
in
is,
one
is actually the U.S. government and Chinese government.
This is due to confiscation, though. They really don't hold it because they're owning it. They just confiscate so much money.
Yes.
Okay,
Or
Hani.
crypto.
Yeah.
I
Hani,
think-
so he says it's an asset and it's been looked at as a safe haven. And this is, for me, is a huge. What do you think?
Okay, first let's go back to 2010. I think I remember when Ben Bernanke, that time he gave in front of, I think, the Congress. When I was speaking, like they asking for a comment about the Bitcoin. What do you think about the Bitcoin? So say he's a central bank head. They thought that he might totally give like a totally like a bad comment about that. But he said no. I think we are moving there. We are moving to a digital currencies. There is a market for that. There is a community for that. There is my people like against our policy currently, especially after 2008. So I think this one will boom in the future. I remember that time the Bitcoin price moved from 100 to 1,000 after Ben Bernanke what he said. So I think there is a community for that. There is many people think it's a safe haven. There is a use for that one, as long as there is a
How
use.
can
and
it
there
be a
is-
safe haven if you have so much volatility?
I think
Right,
if you compare
Okay,
it,
Well, is dying to talk. Well,
Listen,
he
it's-
was-
you will like you will disagree with me,
the
for
guys
sure.
and then-
But if you compare it to some countries' currencies, per se, like we can see how is crypto traded in Nigeria per se because of the Naira is going down badly. How is it in Lebanon? How is it in Iran? How is it in Sudan, in my country? So I think sometimes yes, there is a volatility, but since there is a market cap, big market cap, almost 3 trillion reached that time. I think there is a community for that one. There is a use for that one. People still believe in it, and there is like most of the holders, most of the wallets in the Bitcoin, especially, they are still holding. Don't forget, like there is almost 6 million Bitcoin are lost in lost wallets. So I think the supply is still less. So I think there is a room for it to go up. That's why I think it's still good
So
investment.
what is the next level?
So
90,000.
Wow.
90,000.
I think with Bitcoin in general or crypto in general, it's a part of it is byproduct of U.S. policies of weaponizing the U.S. dollars. So it pushes people to have something that is not controlled by the Fed or the U.S. government. So you see the sanction against Iran, you see the sanction against Russia, you see people being shut off SWIFT system. So they need to have an alternative system that can actually move money fast in a reliable way and in a stable way. So, Bitcoin is just simply, in my opinion, was a byproduct of weaponizing the US government. At this moment, the US government is not really pushing against it because at the end, you have to convert, like you guys said, you have to convert crypto into dollar or local currencies in order for you to use it. So it is a perfect means to move money away from the bureaucracy of banks. And we all working in this field, we have seen it. A lot of customers prefer to deal in stable coin. You know why? Because you don't get the same question that you get from the traditional banking system. You can move millions of dollars in literally seconds. So there is a lot of flexibility that provides for retail clients, for institutional clients. Yes, it comes with some negativity of being the preferred tools for hackers and other things. But overall, when you look at the advantage that it offers, I think it's going to stay simply because of these factors, in addition to people investing away from government-controlled assets.
Oh,
So I think
The
this is
technology
part of it.
itself is the asset, I think.
Sorry?
The technology itself,
Itself is the
it's the
asset?
asset.
It's the asset.
Okay, well, you can talk.
I would just like to add
Okay, you cannot.
to support the temporary, still positive outlook for Bitcoin. From technical point of view, if you take a look at the monthly chart, pullback from the recent record high is still within the parameter of so-called healthy correction. So it is around 38.2% Fibonacci retracement. For the third month is resisting breaking down. So it's supporting the story that this is healthy correction before it moves up again. Demand is very strong. I was reading comments from some market analysts a few days ago. They are operating with $100,000 until the end of the year. Some even more optimistic saying 150. And I was shocked when I read a comment from the guy who was saying Bitcoin by 2030 will reach 1 million.
Yeah.
Theoretically,
I
it is
actually-
possible.
It was on
Practically,
your
we'll see.
Yeah, it's actually.
Maybe it was on your screen.
It was an interview I did with Raoul Pal, who said $1 million. So I'm responsible for that.
Well, I have a lot to say about crypto because I have a long experience in that. A lot of good things, bad things. When it comes to utility, unfortunately, utility is still very, very, very low. When it comes to technology, yes, the technology is there. Of course, there's a change and whatever, and we need to respect that. And for that, there could be a value. But the wrongdoing that's happening in crypto markets is pushing people away. When it comes to Bitcoin itself, what's the most significance is the active supply. When the active supply goes down, the market's going to go up. We're not talking about the full supply, but the active supply. So when it comes to number of wallets who are holding one Bitcoin at least, they cost 1 million. And when you accumulate one Bitcoin, you want to accumulate another. When you start accumulating, you can buy in bits and pieces. So then you're removing that active supply slowly and slowly. And what comes after is the ETF approval, spot ETFs. This also triggered another interest for people who have their money in big institutions where they want to invest 1, 2, 3, whatever % of their money. And they're used to buying the dip for dollar cost averaging, whatever method of doing. So this also triggered the new people to come and be interested. And this is what we've seen in the change in the behavior of crypto. So when we see Bitcoin rallying, we're seeing the dips, they're being bought again. So this comes from the mentality where, okay, if something goes down, if I go for stocks, a drop of 5%, and then I buy the dip to the market to retest the high. For crypto, I can take a more of a secure stance to 15 to 20%, and I will dip my toes a little, and then if that goes well, I would make good money. So when it comes to return and how institutional investors or how real investors are behaving with it, it's really healthy. When it comes to the wrongdoing in the whole crypto industry, a big issue about crypto and where the money could be is that there is no barrier to entry. We were just talking a little that we can create whatever coins at any time. But the money that could be invested in those coins, they're just limited. And when it comes to this limitation, while you have like millions of projects coming out every month, so this will not make a significant value for something. So mainly investors are going to these big ones, Bitcoin, Ethereum, Solana, whatever, to try to move the prices. When it comes to price predictability, this is as if you're just like picking a lottery ticket. Because when it comes
Let's
to...
pick one now.
Yeah, because when it
what
comes...
level
I'll come to that. I'll come to that, don't worry. But when it comes to speaking about a coin where really active supply matters, we know a lot about dormant wallets. So if any dormant wallet at any time would just come and pump like 100,000 Bitcoin in the market, you can see just how the price would falter like 10, 15%, 20%. So when it comes to predictability, it's very hard to do it because we don't have real fundamentals about demand, etc. There are a lot of people that would mix that with the cost of mining a Bitcoin, but still that's not a very solid metric. If I come to say 100,000 could be easy. Even more could be easy. When it comes to the fact that we have a significant demand and active supply is drowning and drowning and drowning, we can go exponentially. This is something that Bitcoin has, while others things they don't have.
So I have 90 and I have 100 now.
Yeah, could be.
Yeah, it's important.
Could be. Listen,
I
I'm
know
a
that
type of person. I'm a type of person that don't throw numbers. A lot of people here could throw number, and if they make it, oh, we made it, we got this analysis, whatever. And if they go wrong, oh, it's fine. It goes down. It's fine. I can't. We will try another time. It's not about that. Markets are not about throwing numbers. Markets are about trading setups And based on these setups, you can decide on certain targets. If there's a target where this setup could push the market to 100,000, yes. But if I don't have a target, then just because everyone is speaking of Bitcoin 100,000, I come and say, oh, 100,000, and then I disappear 2-3 years, Bitcoin goes to 15,000. See, I told you it's at 100,000. This is not like, this is not something solid.
Yeah, but
I'm
what do you
against
think
just
driving that, really?
driving?
Yeah, is it
driving
the
this?
sentiment? Because we said on a fundamental level, there's nothing.
Okay,
that
if you look at
it's
what
not
happened,
explainable.
if you look at the move that happened during the past few days, it's about generic sentiment
Oh.
because like risk appetite improved when inflation figures dropped, and this was clear because
It will take us to the first point we was talking about. Exactly. If we have more liquidity on the market, if there will
cheap
be
money,
a cut rate,
etc.
that will push the prices. This is the only fundamental I can see on the
So
like Bitcoin
liquidity.
trend. Yes.
This could be the one about interest rates, whatever. If you look at the crypto market itself, there are no big headlines now. No big headlines. So what's been driving, that's why if you look at the rest, there isn't much of improvement. When you look at Bitcoin, yes, if we just compare Bitcoin and Ethereum, Bitcoin is close to record, just like 10% away. When you look at Ethereum, it's around 30% away, even 40%. So this is what makes it different. The ETF helped a lot for that appetite to bring new money, new funds to Bitcoin, and I believe this is here to remain. Yeah, this is my main.
Yeah.
But there is no real utility behind having such assets. When it comes to
So you agree it's an asset?
when it comes to, of course, you should respect that it's an
As
asset.
long that you invest in it, it's an asset to
Yeah,
you.
and another thing when it comes to safe haven, yes, if you talk to someone who's been depositing $100 in Bitcoin maybe for the past 14 years, you could have made $1 million, then he would say, yes, this is even more than a safe haven.
More.
When you look at someone who just bought at the previous top of our almost 68,000, the market went to 15,000, so that's a much
disaster.
80% drop. That's a disaster.
It's a disaster. Muhammad.
I totally agree. And it's the word safe haven depends on your behavior as an investor. So it is safe havens for some of the people, and it's not for other investors. The word can be a physical safe haven. People are going to buy like physical golds, bars, real estates, or they're willing to invest in such assets. It is an asset,
It's an
as I say,
asset.
because the technology is itself. It is an asset, and it's the same. If you compare it to the same scenario when the internet and the .com bubble came out back on the first like end of 90s, it's the same scenario. Everyone can create a coin. Back on the days, there was millions of names on the technology. Now Apple, Microsoft, the big names remains. I believe it's the same scenario. The currencies who have a good value of technology behind it will be on the
Yeah.
ground. Others will.
But what makes Bitcoin Bitcoin? Is it, do you think, the limitation of supply, the thing that Wael mentioned?
One of the reason, and again, the like Amjad was just mentioned, I can send you money on spot on the same rate without any like bank interaction and Swift and stuff like that. So it's
Sorry,
more important.
But limitation for supply is not an only driver. If you have like only 2 of these, but there is no demand, it's worthless.
So it's demand.
Yeah,
So
so,
the
it's
demand,
demand. So you
exactly.
need the demand for that. And as long as demand is just being driven by, yes, it's part of your investment protocol, there is a demand there. But millions
It's
of...
mainly sentiment and demand. That's what's driving the market.
Exactly.
Yeah.
I think the demand is high. From the ETF side, I think we have seen the BlackRock trying to acquire more than 220,000 Bitcoins. I think the demand in some certain times, we found it like around 35,000 Bitcoins demand, while the supply is only 900. After the halving, it became 450. So I think it become harder, especially with the power that needed and also the technologies, how many terahash you need to mine one Bitcoin. I think the demand is high, especially from the ETFs, and the supply is very low. That's why I think the price might go up. Still, I think the divergence between the central banks make the uncertainty in the market. That's why I think some of the community grow in cryptocurrencies. That's why I think the price will go up.
Okay.
You can discount what the US or China would do if they notice that the value of Bitcoin is going higher than what they think. Remember, they have the biggest reserve. So they might tip their hands in and maybe sell some Bitcoin.
They already
or-
sent some to Coinbase. If I'm not mistaken, 2 weeks ago, the money that they got from one of the scandals,
Yeah.
they moved some of
Yes,
the
the
Bitcoin,
FTX.
and then the market
Yeah.
dropped around 5% based on that because they were afraid
Basically,
of money.
they're going to make all the investors whole who lost money
So at
at
the end
FTX.
of the day,
so-
even crypto is actually controlled by the
in a sense,
the
I
biggest
think they're having it.
two
You know,
governments.
they
Influence.
use it when they want to. They
Influence,
probably
not
yeah.
controlled.
It could be influenced. If today the SEC would tell you, you can't do anything with Bitcoin, blah, 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 and we could put you in jail if we notice any transaction, what would
So
do?
you're not diversifying away from dollar.
Listen, they are allowing it up to a certain extent. Remember, the biggest weapon in the U.S. arsenal is the U.S. dollar. It's not the weapons.
I
It's not
totally
anything.
agree.
It's 100% the U.S. dollar and the SWIFT system. So as long as this is functional and like Mohammed said that they are using it for gold and for oil, nothing is going to change at the moment. If they see a shift in sentiment or if they see a shift in demand for the US dollar, then they might interfere. But at the moment, it's not really negatively affecting the Fed or the dollar. There's still high demand. The US is still selling all their debt. As long as there's demand for the debt, there's always
will
A good
Exactly.
example on that
Exactly.
was the petro. If you remember the petro that Venezuela tried to
Yes.
instate when they tried to create a coin that's backed by oil prices. What's the
Yeah.
best now? Like having this medium of change that comes from, like, for example, crypto, whatever, but it's backed by real commodities. So Venezuela and the pros, they tried to do that, and then we've seen how the US really tried to shut that off, and they really killed that project. Though
Yeah.
this is something solid. If I could you today that to transact the crypto technology, by it's backed by gold, for example, this could really be something, and this is where governments could
Yeah,
come into
absolutely
play
interfere.
when they feel that there is something. Changing.
That's basically
Threatening
pulling
the
the
go-
carpet
the
from
dollar.
from underneath the legs. The central banks will always allow a bit of freedom as long as they still maintain a proper control. If they see that things changing, then they will interfere. But at the moment, it's not really affecting them as bad.
So it's not a risk yet.
Yeah, that is
Mohammed,
correct. Yeah.
You have something to say.
No, I was saying totally. I agree with what Amjad just said. It is related since World War II, when the U.S. came, like they put these rules to trade through dollar and everything, and until the back 50 years till today, it is on that purpose. So I don't think nothing will affect or treat the dollar at this time.
Yeah. But another thing for that, to let people know, like there's a lot of misconception that when we could use cryptocurrencies, that central banks would use Bitcoin, blah, blah. This is bullshit. If central banks want to do something, it will be central bank digital currency. So it'll be digital dollar, digital euro, etc. And one main thing that's stopping central banks to do this is that this won't find proper place for commercial banks. So when you're used to money, you put your money in the bank, and the bank would do the investments, etc. But when the central bank issues a digital currency and they issue you the wallet, where the commercial banks role in that.
But it's
So this
happening in
is-
Europe, by the way.
It will, exactly. That's why the banking
In
sector
2
is.
years, they will have a digital euro.
Exactly. But if this is going to happen, you have to see what commercial banks will do. They will be more of investment side rather than just custody and that. This is one of the main struggles. Other than that, central banks could just go for CBDC at any time because really it makes their life more easier in tracking a lot of things. So just to avoid confusion, when we see like, yes, cryptocurrencies could be used, it's central bank digital currencies. It's not any of these scam coins that someone is trying to put you, invest in this because the government of I don't know what will use this currency. Try to stay away of these. A lot of scams, they're there. Unfortunately, a lot of people are losing fortunes because of wrongdoing in the crypto space. I can create a coin for every one of you that's sitting here. It would take a minute. I could create anything on that. And if you just promote it, you can raise a lot of funds. And unfortunately, a lot of people are falling scams of this. So please, if you want to do any type of investment, whether it's crypto, whether it was FX, whether it was stocks, anything, just do your own research. Make sure it fits your risk profile. Make sure you're not investing money that you can't afford to lose. And for that, you could be in better place.
And this is
Quickly about the
amazing.
digital currency of the euro and the dollar. The fact that the Fed or in Europe, they cannot tax you on the crypto is one of the main reasons crypto is not very popular in the US. I don't have access to crypto in the US. If I try to open in Binance, they will shut me down. And if I try, Coinbase, it's heavily regulated and guarded. So there is not a lot of access for EU and in the US for crypto because of taxation. Like it's not like you go to Dubai, anywhere you can convert crypto to fiat easily. Can't do this in the US. Can't do this in Europe because of taxation. So the central banks are looking for digital currency to ensure that they tax every penny you have. So,
Out of you.
Exactly. And you're paying your bills, of course.
Yeah.
Absolutely.
Because your wallet's just going to be linked to everything. Oh,
Yeah.
you didn't pay your bill, just freeze his account. And
yeah,
then
so we know,
you're
we,
screwed.
so it's more about control, government control than anything else, yeah.
Hajar is telling me that our time is up. To be honest, I really enjoyed the chat. Thank you very much, gentlemen.
Thank you.
Thank you.
Ladies and
Thank you.
gentlemen,
Thank you
let's
so much.
hear a round of applause for our speakers.